Andrew Jackson was his favorite president. If that didn't ring alarm bells to the Federal Reserve, I don't know what will. Look, Trump's an alpha male. He's like, I don't see in the and he's a nationalist. People think, he's a populist. No, he's a nationalist. And he's sitting there saying, okay, the Federal Reserve does not have the nation's best interests at heart. The central banks have the bankers' best interests at heart, and they have foreign banks' best interests at heart. If to look at this 2008 for you to see how clear it was, how much they lent to the European banks at 0% interest or less, who knows, it's opaque. And while the American people lost their homes, that's not lost on Trump. He's been very consistent his whole life. If he could figure a way to have the Fed overplay their hand and for him to constrain them further or get rid of them, I guarantee he's going to do it.
Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Bob Kudla. Bob is the creator and owner of TradeGeniusAcademy.com, and I am very happy to have him back on the X22 Report Spotlight. Bob, welcome back to the Spotlight.
Hey, Dave. Thanks for having me.
Hey, thanks for being here. And I just wanted to get your take on what happened with the midterms. I mean, we just saw some crazy things happen. I mean, there were bombs sent to many different individuals, most of them Democrats. Brennan, who got his security clearance taken away. We saw a shooting in California. We have the caravan coming up to the border. Sessions resigned. Whitaker took over. We have the fires in California, and all of this happened within like 4 weeks. I mean, do you think this was a coincidence leading up to the midterms?
No, absolutely not. We're now, instead of a news society and a fact society, we're an entertainment and a narrative society. So what everybody tries to do, they try to paint narratives and paint pictures for people and portray those as facts. And we'll talk the fires. The fires are a natural calamity, but it can't be because of government mismanagement. It has to be for something that the left wants to advocate, which is climate change and climate control of our lives. So, none of this is it. The caravan was made up. The response to the fires are made up. You didn't even talk about the election fraud is rampant. And the shooting was just simply tragic. The poor Marina. These kids are at war and they're just losing their minds, and it's just it's a sad thing. And so, but if you notice one thing too, and I know why you're bringing this up, is as soon as the election was over, everything stopped.
Yes.
It's like, they don't have a life of its own. Everything's we live in a manufactured world, Potemkin society, Dave.
I agree. I mean, all of a sudden, everything was squeezed into that one time period. And as soon as the elections were over, everything just stopped. We don't hear about much of it anymore. And we don't see any other events occurring. It's just crazy. But
amazing.
Yeah, I wanted to ask you about Trump and what he's doing with the Fed right now. And we know the Fed is raising interest rates, and the Fed is going to raise interest rates, I think, one more time this year. And what's very interesting about this, Trump came out and he was contradicting the Fed. And you don't see many presidents doing this. I mean, you don't see them, pointing at the Fed saying, hey, if the economy goes down, it's your fault. But then all of a sudden, we had like Jim Cramer come out and saying, hey, maybe the Fed should slow it down. The Wall Street Journal wrote an article saying, hey, we should slow this down. Why is everyone getting on board telling the Fed to slow down here?
Because it was an absolute disaster of a policy approach. Dave, the Federal Reserve has ability to manage these situations with regulatory, actions. They could have 2-3 years ago, they could have stopped all the companies from doing share buybacks. Okay. They didn't do that. They could have told all the banks, do not lend to these companies for buybacks. They didn't do that. They were trying to, usher in the coronation of the next progressive president. And when that didn't happen, they just started to throw on the interest rate hikes, because they'd done this once before, Dave. They did it to George Bush the first, going into his reelection. They kept jamming the rate increases until they caused a recession and blew him out. But Trump's not Bush, and he fought them the whole way. And he kept the economy and he kept the stock market high enough that he was able to preserve his position in the Senate, which is the most important place to hold power, and then the House. And so now he can control treaties and he can control the judiciary. But I think, people think the Fed is an economic agency. It's a political agency. It's a globalist agency. It's opaque. And the other reason why the Fed raised interest rates instead of just simply doing a regulatory approach is that this is how you shift money. People don't understand when the Fed makes profit, they split the profit with the federal government. What they do, Dave, is that they charge interest rates, as you see with the Fed funds rate, but if they don't change the rate for the banks, what they borrow, they keep the difference. And that comes out of our treasury. So not only are we paying more money to borrow money, but the banks make more money on this. So this is all about the profitability of the banks. Very little to do with the economy. Look, their one mandate is to keep the dollar stable. Our dollar is going through the roof. We're crushing the rest of the world with a strong dollar. We're causing dollar shortages out there. They cannot under any circumstances claim that they're pursuing a sound economic policy. So there's something more at work here, and it's political in nature. But it's getting to the point now where, look, General Electric may go bankrupt, Dave, because of this. And not just General Electric, IBM, Pacific Gas and Electric came out. The state of California had to say, hey, we won't let PG&E go bankrupt. I mean, that's how close some of these companies are. And if they keep raising the interest rates, they're going to blow up the whole gold mine here. And Trump, he's one savvy guy. You can like him, you can hate him, you can think he's boorish, whatever. But strategic he is. And he got in front of the Fed on this thing. And this is going to be laid square at their feet. And now everybody's coming up behind him and agreeing with him. And I think after this December move, Dave, it's one and done. And they're going to be backpedaling big time because they're going to force. Look, this stock market may go down another 16 to 20% if they keep up this pace that they're doing. And it's going to destroy things. And so, like they did in 1938. So they've done these moves before. You think these people could read a history book, but they don't.
So you think they're doing this on purpose where they're raising the rates?
You bet.
So, I mean, for people that are out there and they're trying to figure out, what they should do. I mean, you work with Trade Genius Academy and you have your systems doing different trades and things like that. How do you prepare for something like this?
Dave, when trading is I always say it's simple, but it's hard. It's simple in the fact that the data stares you right in the face. There's only two things that you really have to watch it's called momentums and reversals. And so, you can see the money flowing into and you can see the money flowing out of particular stocks or asset classes. And we saw in the beginning of this year that the stock market was top heavy. We also knew that the commodity market on the precious metal side was beaten up pretty bad. And we were suggesting to people lighten up on the stock side, start positioning yourself for gold and silver and in another strategic metal, uranium, for reasons I'll get to in a second. And the next 2 or 3 years, you're going to be really happy because the Fed will have to stop here soon. And when they stop, then gold and silver are simply going to take off because the dollar will no longer keep rising. So that's what we do. We have simple algorithms. We have what's called a momentum algorithm. We call it the money maker. And we have a reversal algorithm. We call it the slingshot. And we put them on our PC, and people who subscribe to us, they have access. If they want to put that on their PC, they can as well, as long as they're a client, and they can see the money flowing in and money flowing out. And then we teach them what is the best setup when those algorithms fire. And it's really simple. We just literally have buy and sell on the screen. So that's what we do. This is 20 years worth of watching the markets and what are the most important things to see. And what it's telling us is that the stock market is overbought on a midterm basis, and it has to come down. And gold and silver and uranium are underbought, and they're getting momentum, and they're going to go up. And so we look to buy the dips in gold, silver, and uranium, and we're looking to what they call sell the rips in the market. And there's ways in which normal people can do that without quote unquote shorting the market. There are really simple ETFs people can use to hedge. And same with crypto. There's simple hedges to hedge your Bitcoin position as well. So that's what we do. We keep it really simple. We've done all the hard work already, and then we help people manage through that because we have chat rooms and trading rooms and training classes and webinars, and most of those things are free. once you become a client. So we try to really engage with the people who are working with us.
I want to get into cryptos in just a sec, but I wanted to ask you about what Trump has in his office. He has Andrew Jackson hanging on the wall. Now, I continually say he has Andrew Jackson on the wall on purpose because Andrew Jackson campaigned to get rid of the central bank. Why do you think Trump has Andrew Jackson hanging on the wall?
Oh, I agree with you. He even said it when he was running for office that Andrew Jackson was his favorite president. If that didn't ring alarm bells to the Federal Reserve, I don't know what will. Look, Trump's an alpha male. He's like, I don't see in the and he's a nationalist. People think, he's a populist. No, he's a nationalist. And he's sitting there saying, okay, the Federal Reserve does not have the nation's best interests at heart. The central banks have the bankers' best interests at heart, and they have foreign banks' best interests at heart. If to look at this 2008 for you to see how clear it was, how much they lent to the European banks at 0% interest or less. Who knows? It's opaque. And while the American people lost their homes, that's not lost on Trump. He's been very consistent his whole life. If he could figure a way to have the Fed overplay their hand and for him to constrain them further or get rid of them, I guarantee he's going to do it. And if they blow up the economy in 2019 and 2020, Dave, you bet. And he's not going to be alone. The left that has taken over the House right now has no love for the Federal Reserve for a whole different set of reasons. So the Federal Reserve's in a really tough spot here. And look, we don't need them in this day and age. This was supposed to be, because you needed these learned people to do these things. Well, there's enough AI out there, machine learning and tools and data, and people are well informed enough that why do we need one or two or six people to run the country, with credit rather than the market run the country? And the other thing too, Dave, is that, fiscal policy is the responsibility of Congress and executed by the president. So the people should be managing the government who manages the development and the creation of currency. Look, we could print our way out of the debt by just creating currency and getting rid of the debt. That is the way fiscal policy is supposed to work. Now, I'm not saying it's not painful at this point because we've created so much debt, but that's how it's supposed to work. You have productivity, you have population growth, you create more currency to manage that, and then you don't let the banks overlend and then put everybody else at risk that they have to raise interest rates to slow the economy down. Yeah, so absolutely, he can't say that, but I'm reading between the lines. He'd be licking his chops to be able to take them on.
Let's just continue with this for a second because you said something very interesting where, he was looking at the Fed and he has Andrew Jackson hanging on the wall and he's out to get the Fed. Do you think he's making the mainstream media, the Wall Street Journal, Jim Cramer, all point to the Fed, that they're the ones responsible if the economy goes down because they're raising the rates? So if you really think about it, CNBC put an article out there. They polled economists saying, yeah, they should slow down the interest rates. And we mentioned Jim Cramer, Wall Street Journal, and many others. Now they're all pointing to the Fed. Do you think this was a strategic plan? If the economy comes down, everyone is pointing to the Fed and maybe they'll say, hey, maybe we have to audit them?
Yeah, I mean, I don't know exactly what will come out, but I totally agree with what the whole statement you made. Trump got out on this thing first. He took all the arrows and he made it easy for people now to climb on board. And the Fed now knows that this narrative they can lose control of this narrative. There was no accident 2 weeks ago where Jerome Powell came out and basically said, well, we're now more data dependent. And today another one came out and said, well, maybe we should look at the data more clearly. And then the third one came out today and said, hey, we should just pause. So they know they don't want to be blamed. They're very, very good at pushing the blame elsewhere. But Trump got in front of them and he's allowing other people now to push his agenda forward. He could just sit back and say, hey, it's not just me. Look at these people, Jim Cramer, respected hedge fund manager, CNBC, respected, news media, Wall Street Journal, the most respected publication. Forbes hates the Fed, so Forbes is on board with this as well, Dave. So now he has everybody carrying the water for him, which he always does. People think he just says things out of control. He says nothing by accident. Everything to him is chess moves 3, 4, 6 months down the line. Whether you agree with him or not agree with him, just don't underestimate him.
Yeah. Now I wanted to move on to cryptocurrency because cryptos, they've been taking a beating right now. And we know the central banks, they've been demonizing cryptocurrency and saying, oh, terrorists use it and all that other stuff. But all of a sudden, crypto started to move down. I mean, did you guys expect this to happen? Were you planning on this?
Well, we saw about a month ago, we saw that the volatility in cryptocurrencies ended. I mean, we went 2 weeks where we had less than a 1% range in Bitcoin. That never happens, Dave. One of the things that people like about cryptocurrencies is it trades up and down a lot, so people can make money on the action. But there was no action for 2 weeks, and then it kind of burped up, and then it fell out of bed. And yeah, so we just said if it was going to break 5,900, we expected it to spill, and because it would break some stops. So now we're saying, okay, it's down to 4,500. We think there's probably going to be a pause in here of tradable bounce, and it could get all the way down to 3,000 before it's all said and done. I don't know. We don't really care. We're just watching the short-term, money flow indicators, and it tells us whether we should be excited about a trade or we should just step away. But let me tell you why we think this is happening. Number one is the dollar is really strong. So that puts pressure on other assets. Number two, the Chinese government has now freed its citizens to now buy and sell cryptocurrencies again. So people who've been stuck holding Bitcoin for a year, and they might have been owning Bitcoin at 16 or 17,000, Dave, as soon as that was able to trade again, a lot of those guys were dumping the coins. So that puts pressure on the market. And then the last thing is there's a kind of a competition, like a civil war between, Bitcoin and this thing called Bitcoin Cash. And the Bitcoin Cash people have a lot of what's called mining power, and which means the ability to do the transactions and to create new coins. And they've been shifting their mining operations to create more Bitcoin Cash and less Bitcoin. And that pushes pressure on the market too. But they're doing it at a loss. So at some point, just like when people short the market and they get overextended, the market does these huge bounces. That's what we think is going to happen in Bitcoin too. But make no mistake, cryptocurrency, and especially Bitcoin or Ethereum, Litecoin, the big three, if you will, they're not going anywhere. And they are absolutely a vaccination against basically government upheaval. There's only two places you can go with your money, in an economic crisis. And I'm not talking about like a recession or something like that. I'm talking about like what happened in Turkey with the guy taking over, in Venezuela with it collapsing, and so on and so forth. Is you got to get your money out of those countries. You convert it into Bitcoin and it's gone in a second. You convert it into gold, you're out of the banking system. So you want to be exposed to these. You want to kind of understand what they're doing. And then you trade in and out of them to build up your stash over time. And then if we think there's going to be a big reset on the price, you just step away and let the price fall, and you get it at a cheaper price. But it's not going to zero. Don't listen to anybody who tells you it's going to zero, because they have an agenda too. And so you just buy when it's low and the money comes in, and you sell when it's high when the money's starting to come out. Or if you're a holder, you take half off and let it come down and you buy again. So that's our view on it. And I hope that was a good explanation for you.
Yeah, I wanted to ask you, do you think it's a coincidence that gold and silver and cryptocurrencies, I mean, we know gold and silver, they're brought down with paper contracts, and cryptos have been dropping. They both have been dropping. Gold has been pretty steady. But don't you think it's odd that they're both at very low levels right now?
Yeah, well, no, it's not odd. It's first of all, the dollar's causing some of that. Number two, Bitcoin is also can be pushed down with paper contracts too, Dave. There's a Bitcoin futures. In fact, since December of this year, that's when the market peaked, is when they start the futures contracts. So they're absolutely trying very hard to not let gold, silver, and Bitcoin be competition to the fiat order. But they're going to lose control of that order, and then the prices are going to find their own natural level. And I think gold and silver already has. Something happened in August is holding the them from pushing the price down any further. And when the dollar and gold and silver start moving together, then the central banks have lost control, and that's when you want to go with both feet. And right now they're kind of tracking together. They've stopped going down with the dollar strengthening. So I think we're close.
So with this market that is absolutely crazy right now, I mean, we see the market, it's up and then all of a sudden it drops 400 points and it's all over the place. People are, write into me and they're very nervous about what is going on here. People are afraid of a recession because you hear it all over the news and things like that a recession's coming. What should people do at this time? Should they invest? Should they not invest? What should they do to protect their wealth?
Well, and I started telling this to people in February, and I did it personally. I went to cash in my 401ks just because I know the upside I would lose maybe was 8 to 10%, but the downside is 30 to 40%, if not more. And so anytime anybody asks me, I say, look, if you can't get out completely or you don't think it's really going to fall that far, at least take some of it and go to cash. What's happening, Dave, what people don't realize, the reason why the market shot up so much from 2016 to the first of this year is that the Swiss and the Japanese central banks were buying our biggest companies. Those are the social media companies. Those were Facebook, Netflix, Google, Apple, et cetera, et cetera. And it created an artificial lift to the market because these are called market cap weighted indexes. So it makes it look better on the way up. Now, the good news is from an economic standpoint, it makes when the market goes down, it makes it look worse than the economic backdrop is because, the rest of these stocks didn't go up like these stocks did, and they're not going to fall as much as those stocks did as well. But we're overvalued. And so my view is that the Federal Reserve is trying to engineer a move back down to basically wipe out that 2016 to 2018 move. And I think once we get to the S&P or the Dow at 20,000, the S&P at 2,000, 2,100, I think we'll get into a more stable market. Regarding the economy, Trump's doing the right things. What he's doing is he's bringing the manufacturing back into the country. And what he's doing is he's taking the economic pain and he's moving it to China. Now, the downside to doing that, you create some inflation, but that's not bad in a long-term sense. But it also will create what's called velocity of money. And those two things are going to create more tax revenue. And we're able to then control our destiny more because we'll need less things from a country that has a different currency than we do. And so we're blessed in the United States in the fact that we have all the energy we need to run our economy, and we have all the food resources we need to run our economy, and we have the technical skill and the infrastructure to run our economy. So those things are intact. So we can absorb basically a worldwide collapse in currencies, if you will, because we can do everything. Countries like India and Russia and China, not so much. So that's why I think our economy is going to do okay. That doesn't mean we won't go into a recession, but what people don't realize is, look, half our population is going to be retired, Dave, in the next 3 to 5 years, and so we're going to have chronic job shortages on a go-forward basis. So the unemployment rate's not going to skyrocket because they can't find enough people, and people who are retired are going to be on some sort of entitlement program or drawing out their pensions. So it's going to be more of a steady state from an economic standpoint, but the stock market needs to come down. But the good news too is I think the interest rates are going to fall as well. So people who still need to refinance their home or if they need to get a better deal on their credit cards or HELOCs within the next 18 months, they're absolutely going to have that opportunity.
So you do think we're heading towards some type of recession or market correction?
Yeah, well, market correction for sure. Recession, maybe a growth recession, but I find it hard to believe that we'll go into any kind of economic recession that's pretty severe because of just the things that I just highlighted.
Before I forget, Bob, before we started recording, you mentioned something about a special package for Trade Genius Academy. Can you explain to everyone what this special package is?
Yeah, we do. This is like our big annual sale that we do. We're no different than anybody else, and this is the best prices we put out for the year. So if you haven't used our services before, we have 6 bundles created for, if you want to, if you're like just learning how to trade, we have 2 bundles on services. If you're intermediate trader, we have a second level bundle of services, and we have coaching, and we have a whole training package for people as well. And so we mixed in a lot of things, but the cool thing that we've done is we bundled training, coaching, and signals and trading room into the beginner packages. And Dave, the price we charge on this is very modest, and it's really a good deal for people, but they have to buy by Friday midnight to be able to get the deal. This best price of the year, and we go back to normal pricing going into December. So, and the website is, we're tradegeniusacademy.com, but tradelikeagenius.com gets you there as well. If you have questions, you can just call on the phone that we have there. You can hit chat, or you can just go into the website and just buy what you think is of interest to you. But what we do is, it's not gurus here picking and choosing stocks. We absolutely have a methodology, and we have, software tools that are helping us find the best setups and the best time to exit any kind of trades. So that's what we do, Dave, and thanks for letting me share that.
Yeah, fantastic. Thank you very much. And thank you once again for coming on the X22 Report Spotlight. I really, really appreciate it. I know it was a tight squeeze getting you in right before Thanksgiving, but I really appreciate you coming on here. And I'm going to be putting all the links at the bottom of the video to make it a lot easier for people to get to your site. Thank you once again, Bob, for coming on the Spotlight.
Thanks for having me, and have a great Thanksgiving.
You too.